Sanctions announced by the US and the EU on Russia not having that much effect on the markets, actually.
No, they're not. There was an impressive rebound, in fact, in the European markets yesterday. Investors quite relieved that these sanctions weren't touching those key investment areas, but trading a little bit softer starting today, both London and Paris, and in fact Frankfurt as well, opening just slightly in the red, as you can see. The mining firm Antofagasta, bit of a mouthful, one of the biggest risers in the FTSE 100, up around 4% after announcing a better than expected dividend in London. Broadly positive picture in Asia as well. You can see all the markets there ending up in the green. The Nikkei bouncing back from 6-week lows we saw yesterday, closing up just under 1%. Now, these latest measures of asset freezes and visa bans targeting 21 Russian and Ukrainian individuals are the second phase of sanctions being taken by the EU and the US. The first was to pull back from those economic talks and preparations for the G8 summit. But the fears now investors have are circling around a third phase of sanctions, those that would tie in with key business areas. Nicholas Rushworth has the story.
Should tension persist over Ukraine, there could be a phase 3 of sanctions by the EU, targeting a range of Russian business interests directly. However, for that, an agreement would have to be forged, as various countries seek to protect their interests. France, for example, has key defense contracts with Moscow for 2 aircraft carriers in a deal worth 1.2 billion euros. An arms embargo would end that. The German energy group RWE, meanwhile, is selling its oil and gas exploration and production division to the Russian investment group Letter One. That deal is valued at 5 billion euros. Germany, Europe's economic giant, can take the hit. In terms of its dependence on Russian gas, recent good weather is helping.
Germany sends about 3% of its exports to Russia. That's not really that much. OK, 30% of our gas imports come from Russia. That might sound like a lot, but there are now many other countries which offer gas. And the gas reserves here in Germany are very well stocked because of the mild winter.
The UK too has significant business links with Russia. The City of London is the trading centre of choice for Russian oligarchs. There are 70 Russian companies listed on the London Stock Exchange. While certain EU countries would lose out, so too would Russia. The EU is far and away its main trading partner. Russia's economy has suffered during this Ukraine crisis. Investors have pulled out around 30 billion euros of capital, more than a tenth of economic output in the first quarter.
Now to France now. Paris, in fact. Yesterday we had no cars. Today we've got no planes. Is that right?
Fewer aeroplanes anyway. This due to a strike by air traffic controllers affecting up to a third of flights in and out of French airports. Around 200 flights in all cancelled. The French Civil Aviation Authority had advised airlines to reduce traffic by 30% through the airports in Paris and by 20% in other airports here in France. This all part of a day of action by unions against President Hollande's plan to reduce social charges for employers.
Some other business news now, including some good news for the European car industry.
Yes, the recovery in the European car market does seem to be continuing. Figures from the European Car Makers Association showing that sales rose by 8% in February. Over 860,000 new cars were registered over the month, the 6th consecutive month of rises. But sales continue to fall here in France, down 1.4%. And sales at the online fashion retailer ASOS rose by more than a third in the 6 months to the end of February. The company now says it's aiming to top income figures of 1.2 billion euros in the coming year. It's investing in new warehouses in the UK and Germany. ASOS had 8.2 million active users on their site at the end of last month. The British supermarket chain Sainsbury's has seen its quarterly sales fall for the first time in 9 years. Excluding fuel, like-for-like sales at its UK stores were down 3.1% in the 10 weeks to March 15th. Sainsbury's is the latest supermarket chain in the UK to be hit by falling sales. Last week, rival Morrison's reported its lowest annual profit for 5 years. Shares in Sainsbury's down around 1.5% in London today. And the Swedish truck maker Scania has rejected a €6.7 billion takeover bid from Volkswagen. A committee at the company says the offer doesn't reflect the long-term value of the firm. Volkswagen already owns 63% of Scania and controls almost 90% of the voting rights.
Now, this last story I was intrigued by a couple of hours ago. Found out about it now from Stephen. Controversy about whiskey brewing in Tennessee.
Yes, this is to do with if you want to label your whiskey Tennessee whiskey. According to a law passed last year in the state, it has to meet certain rules, including it has to be made in the state from 51% corn, filtered through maple charcoal, and aged in new charred oak barrels. That just magically happens to be the recipe for Jack Daniel's, which is the biggest whiskey produced in Tennessee. But drinks giant Diageo, which owns one of its rivals, has now challenged this law. It's led to a huge controversy in the state, with arguing that both sides are diluting the brand of Tennessee whiskey. And in fact, both the legislature, the House and the Senate, are to discuss that later today. So Tennessee whiskey back in politicians' hands.
I love the way they're filling up the bottle there with a little hole. You can almost taste it, can't you? Stephen Carroll with Business on France 24. Flo's here with the papers. Crimea, the international papers are really focusing on today.
That's right. It's still getting a lot of focus after that referendum